Alright, so the question is it time to short? What I have here is two charts of the diamonds, which is the Dow Jones Industrial Average ETF, which is a 1 to 100 ratio. So the Dow's at 11,000, so the diamonds are at 111. Question is, are we headed for a drop? A couple weeks ago, I had predicted a drop, and it never really materialized. It dropped a little bit, but then bounced back up. So we're in the same kind of position again right now, and the question is this time for real? So as you can see here on the left-hand chart, the yellow line is the actual price of the diamonds, and they've been headed steadily up from a low of just below 10,000 basically, and now we're sitting at 11,100 or so. It's been a pretty steep rise, and without major interruption. So is it time for one of those interruptions? The signs are looking good for a short here because, well, if we just move down our indicators here, I don't want to go into what each one is, but basically each one of these is coming from a high level, and the first two have turned down, and the other two, the 3 and 4, have kind of flattened out on the high side. Over on the right side, we have a candlestick chart of the same thing, and this thick white line is just a simple moving average. And as you can see, things are not going up quite as steeply as they were before. But here we have some more information that we can use. The RSI type, this is a smooth RSI, but it has gone low, which is when it goes from high to low, that's usually a sign that something has been overbought. And then the most important one here is this MACD. Now, as you can see, it peaked way back in, what was that, September, and then but the diamonds continued upward, but each time at each peak, this got weaker and weaker. And that's what we call bearish divergence, where the stock moves in one way, but the indicators move in another, and that tends to indicate that the stock will reverse direction. Nothing in life is guaranteed, but it's looking pretty good. With the stock market these days, we're always subject to the flooding of liquidity, and just new money from basically bank reserves being given to the banks by the Fed, and them pumping it into the system. So shorts are going to be probably smaller than they would be otherwise, just because there's that support in the system. However, is it time to jump in and do a short? Well, it's looking, it'd be pretty aggressive to do it right now, but maybe you want to start with a small position and add in, buy a put spread, a bearish put spread, so you could buy some 110s and sell some 106s, something like that. And that way mitigate your cost, and buy a couple contracts that you feel comfortable with. So this is for all my guys over at livebusinesschat.com. Check out the link in the description box, and we'll see you later.